So I think India is in everyone's frame of mind. Obviously, it's not such a big allocation for them that they get too excited or too worried about it.
Okay.
But I'll give you a not so scary answer, and then maybe we'll touch upon the scary thing. So I think what was happening last 5-6 months was obviously U.S. yields had started to come off, and currency was very strong. So global flows were going into U.S. because you make money when yields go down on the upside as far as bond prices are concerned. Equity markets were doing very, very well because of huge liquidity, and were gaining in currency also. I think last month or so that has reversed. And that is very unlike what maybe Trump and his team would have envisaged. And I think that is something, maybe the most important reason why they are backing off a little bit now. So now what has happened is yields have shot up. 10-year yields are at 4.3, 4.4. 30-year yields are closer to 5%. DXY from 110 at its peak has fallen to 99. And now there's a reverse cycle. So those who are invested in US are now losing because bond prices have fallen 3-4%. Yeah. Nasdaq is down 12-14% year to date, and they're losing on currency also. If you look at US versus Swiss franc, or US versus euro, or US versus British pound, I think dollar is like really got butchered. And I think there is some reverse flow which has started to happen. But all said and done, I think US is still 60-65% of the world's market cap. I think that is a little scary, but at the same time, it's an opportunity. So, if you just wear the optimist hat, which we always are optimistic. So 25 years, we have always been optimistic. Even during COVID, we were optimistic. During war times, we are optimistic. And I think it's paid off well. So if 5% of the world's flow moves out, so, global flows, $20 trillion worth of equity is owned by global funds and 40 trillion by US funds and US investors. If totally 5% were to move out of US, because there it's, clear, you can move anywhere. It's $3 trillion. And now if even now 5% of that 3 trillion comes to India, it's $150 billion. And we get very worried when $20-30 billion moves out.
Yeah.
But this $150 billion can come into the country over the next 2, 3, 4 years. Even if 5% move out of US, and out of what moves out of US, only 5% comes. So technically 0.25%. And I think that is not far-fetched to envisage that money can come in. So I think there will definitely be opportunity. The other thing is, obviously, there are not too many assets and too many countries where you can invest in. And I think India to that extent stands out, because this is one country which can from 4 trillion go to maybe 8, 9 in the next 6, 7 years, and maybe to $20-25 trillion over the next 2-3 decades. I think the problem in India has been slower corporate profit growth and valuations which are not entirely cheap.
Right.
I think both will get sorted with time, and I think that would be the time when flows come back, in a big way.
So you believe a time correction could be on the anvil, if not a price correction?
It's already there. So if you see, September is when we peaked. September 24. From there, index is down 12, 13, 14%, depending on, whether it's 22.5 or 23. You have already had 7-8 months go by. I don't think anything dramatic is going to happen in the next couple of months, because there is still apprehension of what will happen after 90 days and so on and so forth. So you had 1 year of correction and 12-15% of price correction. The only problem is, normally in 1 year, your profit growth is 14-15%. So this correction of 15% technically is 30%. This time profit growth has been only 5%.
True.
So maybe it might last a couple of months more, but I think we are getting there. So our view is very clear. I think we have possibly hit the bottom of what we touched when tariffs were announced. But big money still has some time before we can get visibility of that to be made.